The broadcast is now starting. All attendees are in listen-only mode.
Good day, everybody, and welcome to the SBG Securities Monthly Market Update with Garth Mackenzie. My name is Dinelle Tsamela, and before I hand over to Garth, I just want to do a bit of housekeeping and make sure that everyone can hear me clearly. So if you can hear me, could you please lift your digital hand? It'll be the icon, it's like the little cursor hand. Okay, perfect. I see a couple of hands, so I'm going to hand over to Garth. As always, before I do, Garth will go through the presentation. Please feel free to send your questions through, and he'll address them right at the end of the webinar. Garth, hello.
Hi, Danero. Thank you very much for the opportunity again, and hi, everybody. Welcome back. Another monthly market update. And as always, it's been a fairly interesting month over the last 4 weeks since I last spoke to you, what with Turkey creating some jitters in the market and whatever. So we'll talk a little bit about that, but it's never dull at the moment, that's for sure. I'm going to follow very much the same sort of template that I do most months. I find it works quite well with the odd change to the sort of the meat of the presentation, but I try and stick to the general same skeleton. So we'll look at some key US factors, then some global indices, some commodities, currencies, then we'll bring it home to the South African indices, and then we'll look at our top 5 shares on the JSE, and after that we'll take some questions. So we'll delve in first and look at the US market. So here is a weekly chart of the S&P 500. And it's been grinding higher since April of this year. Obviously, we had quite a bit of volatility in the first quarter of the year with that big sell-off into February, and then a fair amount of volatility in February and March. But since then, since April, basically, it's been gradually grinding higher and higher. And it's now reached the prior high that we saw in January. That happened the night before last. And we tested that prior high, which is a 28.75. And this now makes it the longest bull market in history. So quite a feat. I think I can't give you the exact number of days, but I think it's something like it's approaching 3,500 days or something along those lines. It's the longest bull market ever. If we look at the daily chart here, you can see now that January high was revisited the day before yesterday. Very briefly, it touched up at just above 28.75. It seems as if it's maybe going to consolidate a little bit here. We'll see. But broadly speaking, this overall pattern of the last couple of months is still fairly bullish. You've got rising highs and rising lows, and whilst that is the case, and whilst the 50-day moving average is pointing up over here as it is, that to me suggests that we probably will see this market go on to make new highs. And the question only really for me now is whether it consolidates a little bit first, gives a little bit of a pullback, and then goes on to break to a new high, or whether it's going to push on out straight from here onwards. And I don't really know the answer to that. But in the immediate future, we've got support down at 2,800 is quite an important support zone on this market. So if it does pull back into that sort of area, then I think there's a fair chance that would line up a buying opportunity for another attempt back at these prior highs, and then quite feasibly move beyond that to new highs then. So the S&P 500 is still looking quite bullish, and as you'll see with all the equity indices that we look at, probably this is actually the most bullish throughout the world. The rest of the geographies that we're going to look at are not looking nearly as good as this. All right, and then this is the VIX index. It's the volatility index that's used by options traders on the Chicago Board Options Exchange, and really no difference from here from last month. It's just the same old story, return to calm. Obviously, all that volatility that we saw in the beginning of the year with the VIX spiking up to about 50 at one stage, that has since abated. And we're now sitting back down at VIX levels sort of between 10 and 12, which is where the VIX spent a lot of time last year when it was also very, very calm. So nothing really much has changed here over the last month or so. All right, then this is the US 10-year Treasury yield. I always like to look at this because it is very important. Yields is a big theme this year. Rising interest rates in the US is a big theme. So we watch these 10-year yields and also the longer dated yields than that as well in the US. What's quite interesting to note though is that we had quite a big surge in yields into the beginning of the year, and then actually it's gone mostly sideways since then. The 10-year Treasury has mostly traded between about 2.8%, and it briefly went up above 3% at some stage earlier in May. But for the most part, it's actually been going sideways. Last month, I said be careful, or just be aware that there's a head and shoulders pattern. It's not perfectly formed, but that there was a head and shoulders pattern forming. I didn't think it would break down below the bottom of the neckline. I suggested that it would probably fail and move higher. I still kind of feel that way. I mean, yes, it's gone a little bit below this dotted line here, which it sort of marks the neckline of the head and shoulders pattern. But below this here at about 2.75% or so, 2.8%, that sort of area, there's quite a lot of support on this chart as well for the US 10-year Treasury yield. So my expectation is that if any dip that we see in yields down here probably won't last all that long, and then you'd probably see yields pushing up again. And remember that your yield on a bond trades inversely to the price of the bond. So if your yield is coming down, as has been the case over the last couple of weeks, that means the bond's price is moving up. But if we then see bond yields moving up again, then that will imply bond prices coming down. And there are still those out there in the bond world who feel that we've seen the top of the bond bull market, and that we're going to see gradual rising of US yields and consequently falling prices of US bonds now for some time, and that we've entered a new bear market for US bonds. So we'll wait and see. But for this year, the yield curve in the world, the 10-year Treasury yield is always going to be very important, and it remains important. We continue to watch it month after month. All right, then we're looking at the yield curve here now. So what the yield curve really is, it's the 10-year Treasury yield minus the 2-year Treasury yield. And the reason it's very much in focus at the moment globally is because it is edging ever closer to zero. And in the past, whenever you've had an inversion of the yield curve, in other words, when the 2-year Treasury yield is higher than the 10-year Treasury yield, that creates an inversion in the yield curve, and that has always preceded a recession. And the thinking behind that is that banks, generally speaking, will borrow short and lend long, and if you have that relationship not working, obviously they want to borrow at a lower rate shorter term and lend at a higher rate longer term. That's how the sort of the basic banking model works. And if that whole thing inverts, it creates all kinds of liquidity problems, and it generally is an early warning of a looming recession. And if you have a look, these gray areas on the chart that I'm pointing out there now are recessions in the US economy. So the last time there was a recession was back in 2008 and 2009, and we haven't had one since then. But obviously, with the yield curve heading lower and lower and lower, and now sitting at 0.24%, a lot of people are watching this carefully and getting concerned that if it starts to go negative, then it's likely to indicate an imminent recession. And when I say imminent, I mean doesn't mean it'll happen immediately, but it could be a year or two out. But nevertheless, it's one thing. It's one of the storm clouds on the horizon that we keep an eye on, and I think people need to be very much aware of this. Just grab some water. Sorry, I've got a bit of a scratchy throat at the moment. Okay, now we're going to look at the global indices other than US. So we'll go to Europe, the Footsie and the DAX, and then look at some Asian markets. And then I want to also take another look at the emerging markets index this month as well. So starting with the Footsie, this is a daily chart. I remember last month saying to you, it didn't really inspire much confidence in me one way or the other. I couldn't get excited about it on the long side or the short side. I'd said that it had broken out of this what looked like a flag type of pattern, but the break really was not very convincing, and it looked almost as if it was likely to then sort of turn to the downside again, and it has done that over the last couple of weeks. This level around 7,500 on the Footsie is quite important. You can see that that is now lateral support from the middle of June and again from the middle of August now. It's made a lower high recently. If this little bounce that we're seeing here now makes another lower high, then I think this 7,500 support level could actually become vulnerable to a break to the downside. So we'll need to watch that quite carefully. The Footsie is quite sensitive to a couple of things. One is it's very heavily laden with oil-sensitive stocks. So the likes of British Petroleum and Royal Dutch Shell and a few others. So if you have a sort of a softening oil price, that doesn't help things. And then the other thing, of course, is the value of the pound. And the pound has been very, very weak. But over the last 2 days or so, it's started to show some signs of strengthening a little bit. If the pound were to strengthen in any meaningful way, which I don't know that it will, but if the pound were to strengthen in any meaningful way, that would then probably see the Footsie breaking to the downside here. But on a pure technical analysis basis, to me, this just looks a little bit vulnerable. And if it does start to break below 7,500, then I think there's a fairly good chance it comes down to this next support zone, which is at about 7,300. So we'll keep an eye on that. And then this is the DAX. Here I'm looking at a weekly chart first. We're actually going to look at the DAX in a little bit more detail. I've covered a few charts, longer term and shorter term here. The long-term chart going back to back to 2009, effectively that now marks the whole of this bull market that we started in 2009 after the financial crisis. And you can see how well that trend line fits and how it joins the various low points. Now, it's important at the moment that we're quite close to that longer term upward trend on the DAX here. So around about 12,000 is an important zone of support for the DAX based on that long term upward trend. There is a head and shoulders pattern evident over here that's formed over the last year and a half. So we do need to keep an eye on that. If it starts to break below 12,000 and below 11,800, that would then actually mark a break below this long term bull trend. So I'm not saying it will happen, but I think it's just something to be aware of, given that we do have a situation at the moment where there's a head and shoulders pattern here, and that support area is currently being tested. If it can't hold that support, then it does make it potentially vulnerable to a move to the downside. Here's the weekly chart of the DAX again, just looking at it more recently. So we've got 3 years worth of trading history here, and there you can see that head and shoulders pattern more clearly. And the neckline of that head and shoulders is at 11,800, as you can see there. So this 12,000 area, 11,800 area is quite important in the near term. We will need to watch that carefully. And if it starts to break below that area, well, then that actually would be quite meaningful in the sense that it would validate this head and shoulders pattern, and it would also mark a break below the long-term upward trend that I showed you on this prior chart over here. So keep that in your sights in the next couple of weeks. Then just again looking at the DAX, but now looking at a daily chart, and this only goes back really to the beginning of this year. How does it look? Well, not great to me. You know, this is the forming of the bigger right shoulder that I spoke to you about on those previous weekly charts. And you can see lower highs evident, and these flat bottoms at around 12,100. So we'll see what happens here. But I mean, in my eyes, if this thing moves up and it fails here at about 12,500, or even if it goes to 12,600 and fails and then begins to turn down, then there's a chance that it has another crack at this lateral support area at 12,100, and then eventually it could even make its way down to 11,800. So for my money, it's not the best looking chart setup, actually. It looks a bit weak. And also take note that the price is now well below the 200-day and the 50-day moving averages, and both of them are pointing downwards. And your 50-day moving average is below your 200-day moving average, which is generally a sign of pretty weak momentum. So the DAX not looking too great overall. All right, then let's move across to the Asian markets rather. This is the Hang Seng Index, and here you can see what I've got on about quite a lot over the last couple of weeks, or last couple of months rather, when we've done these webinars, is the fact that this break below 30,000 on the Hang Seng was quite meaningful. And you can see that it has resulted in further selling pressure from there. It's also meant we've actually now broken below this upward trend that goes back to early 2016. So overall, this chart doesn't look good to me. Not to say there can't be some bounces along the way, but certainly, it's making lower highs and lower lows and not looking all that fantastic in my mind. And this break below 30,000 was very, very meaningful. I would suspect that if we ever did see a push back up towards 30,000 on the Hang Seng, it could quite feasibly be met with quite stiff resistance up there. This is the daily chart of the Hang Seng. And just here, again, it shows the significance of this 30,000 level that I keep talking about. Also, the fact that there was a gap down below that rising trend line was actually quite meaningful. And that gap has never been filled. But if it did ever make its way back up there and fill that gap, it's probably a potential area where I might even want to look to get short on this market based on those longer term technicals that I showed you previously. Right, then here's the Nikkei. Again, it's not as, it looks better than the Hang Seng, but still doesn't look great. This falling wedge pattern that I'd spoken about a few months back looked bullish. It looked as if it should go back to prior highs, but it's now starting to look a little bit vulnerable, I think. We've got this rounding top pattern forming over here. I think I've got a daily chart. Yeah, I do have a daily chart of the Nikkei here. So here you can see that sort of rounding top pattern evident here. What I think needs to happen here is it needs to start breaking out above 23,000 convincingly if there is going to be a bull case to be had here for the Japanese market. And if it got above 23,000, then in all likelihood it would go back up to 24,000. But if it can't, and if this rounding top continues to form with lower highs and lower lows, as has been the case over the last 2 or 3 months, then I think the risk could still potentially be to the downside, where we maybe go back down to this 21,500 region, and below that then 20,500. So right now I don't think it's looking all that fantastic in my eyes. It needs to go above 23,000 to start turning the picture more bullish again. Otherwise it looks a bit ominous. All right, and then this is what I showed last month, and I want to show it again. It's the MSCI Emerging Markets Index, but it's the ETF. So if you're ever interested in trading it, it's listed in New York. The code is EEM. It trades in US dollars, but it's effectively an iShares MSCI Emerging Markets ETF. And it's a weekly chart going back all the way to 2005, so very, very long term. The reason I've gone back that far is to show the significance of what was previously overhead resistance here on this chart, and what now should theoretically become support into any weakness. So this area around $40 on this ETF is interesting, and it's quite strong support based on all of those prior highs. So I think if it starts to come back down towards that $40 area, it could get interesting on the long side. I've seen quite a lot of stuff recently which suggests that emerging markets are extremely cheap on a relative basis versus developed markets. So let's see. It's worthwhile keeping an eye on that. If it can hold that $40 and reverse convincingly up off there, and you wanted an opportunity to get into emerging market exposure, that might be an interesting thing to possibly look at. And it's gone from 50 to 50. If it gets to 40, I mean, that would be, about a 25% correction on emerging markets. It's just quite meaningful. And as I say, you'd then be falling into this massive zone of support here. So keep an eye on that. All right, then let's have a look at some commodities. We'll look at gold, platinum, the Bloomberg Industrial Metals Index, and then Brent crude oil. So here's the gold price. I must say I've gotten this one wrong over the last many months. I've looked for possible support areas, and all of the supports have just failed and failed and failed. Part of that has been a function of the strong US dollar. A strong dollar is not good for the gold price, and you've seen the gold price just slipping away. I mean, it's hardly had an up week at all since about April. It's fallen. How much is it? About $200 from the peak to the recent low. So it's been a big sell-off for the gold price. Where to from here? Well, look, this downtrend still very much remains intact. It is very, very oversold here now. You can see an RSI buy signals then being given on the weekly chart there. So there's a chance that it maybe does stage a little bit of a bounce, but overall, yeah, broadly speaking, the chart doesn't look fantastic, but it probably is due a bit of a bounce quite soon. A lot will depend, however, on what the dollar does. If the dollar strengthens, then this is going to remain under pressure. If the dollar were to weaken a little bit, then that might actually help the gold price up slightly. This is a daily chart of the gold price just to show you in more recent trading history what it looks like. So we're going back to March here, and you can see the break below what is about $1,215 an ounce recently. That was a bearish break that validated this little flat-sided triangle and saw a swift move to the downside. The gold price traded down as low as $1,170 recently, and has now perked back up, and it's been making an effort to get up to around about this 1200 area. You can see there still is downtrend resistance intact here, and in the 1215, 1220 sort of area, it is now quite stiff overhead resistance. So if the gold price was really going to have any chance of making any meaningful gains from here, it needs to first get out above this resistance, which is at about 1215. If it can't, if it fails there and it reverses down, then there's a chance we go back and retest the prior lows. Overall, the trend is still very much down. You've got lower highs and lower lows. You've got a downward sloping 50-day moving average, etc., etc. So whilst that is the case, in technical terms, you've still got to say, well, that's a bearish setup. But also do keep in mind that the gold price is very oversold now, and the possibility of just a somewhat counter trend rally does begin to exist when it's as oversold as it is now. All right, now this is the platinum price weekly chart, and again, it just looks really, really, really weak. Platinum metal breaking below $880 earlier this year was a bearish break, and you can see how it's just continued to slide away. I mean, I don't know, I haven't gone back far enough to look when the last time what platinum traded at this sort of area below $800 an ounce, but it was a very long time ago, and it just shows you this is really it's really a sorry state of affairs for platinum in general and for the metal. It just seems as if the appetite for the stuff is dwindling somewhat. And the other problem, of course, for platinum is that you can recycle it. So whenever old cars get scrapped, they just take a catalytic converter out and recycle it and reuse it. So, you know, there's not as much of a need to go mining the stuff because there's lots of it up above the ground. And hence you see the weakness in the platinum price that you do here. All right, and then this is the Bloomberg Industrial Metals Index, which I like to focus on. I always think it's an interesting read of the health of the global economy. It's made up of 4 metals, copper, nickel, zinc, and I want to say lead, but I might be wrong on the 4th one. I just need to check that. But in any case, 4 industrial metals. And you may have heard the saying in the past that Dr. Copper is always a good barometer for the read of the health of the global economy. And you look at the copper price. If the copper price is strong, then it generally implies a strong global economy. And if the copper price is weak, it signals that there's possibly some weakness in the global economy. So the fact that this thing has now broken down below this upward trend is quite significant, I think. And it's a result of softness in all of those metals prices that I've mentioned, including the price of copper. So when you see a thing like this, you do sort of have to ask yourself, you know, what is the health of the global economy looking like when some of the most important industrial metals are starting to show quite significant price weakness over the last little while. All right, and then this is the price of Brent crude oil. So broadly speaking, that upward trend still does remain intact. You can see from early 2016 how it's made nice successive higher lows and higher highs. Over the last, say, 4 or 5 months, this just looks like a nice healthy consolidation back towards the upward trend. On the daily chart, I mean, this is what I highlighted last month, and I just want to bring it back. So this is last month's chart. What I'd said was that on the sort of the shorter term trading, it had broken below this upward trend. It was rallying back up, and it looked as if it was likely to push up and fail and then head down again. And I'd actually done a trade on this for my Traders Corner TV show. So this is what we showed last month. If we just fast forward 1 month now, here you can see exactly what did happen. So it made that break to the downside, and end of July was when we spoke the last time, and that was when I said, look, it's going to probably get up to about $75 a barrel, and then it's likely to fall away from there. And that's exactly what has happened. So it worked out. I was short some Brent crude oil futures contracts for my TV show, and we managed to bank some profit there. So that worked out nicely. It's now moved up off the 200-day moving average, and the question is where to from here. There is obviously some overhead resistance here at about $75.50. So we'll see what happens there if it fails and comes back a little bit. But broadly speaking, I do kind of think that there might be a bit more consolidation to come here still. And maybe only when we go back, if we just look at this long-term weekly chart here for Brent oil, maybe once it meets this longer-term upward trend, which would come in just below 70 or round about $70 a barrel, maybe that's where it starts to encounter a little bit of buying interest before another leg to the upside. Possibly. I don't know. We'll see. We'll monitor it on a week-to-week basis. All right. So that's the commodities done. Then let's have a look at some of the currencies markets. So we'll look at the US dollar index, the euro dollar, dollar pound, and then the rand dollar exchange rate. So here's the US dollar index. It's always an interesting read of the dollar against other developed market currencies. So when I say that it's an index that's made up of 6 currencies: the dollar versus the euro, the Canadian dollar, the Swiss franc, the Swedish krona, this pound sterling, and the yen. So all developed markets, economies, and there's different weightings. The biggest weighting is to the euro-dollar pair. But this index really tracks those 6 currencies and sees how they're all performing against the US dollar. So when it rises, that implies dollar strength. So that's what we've seen since basically April of this year. We've seen the dollar getting stronger from a level of about 88 on the dollar index. It's now moved up to, and it's gone broken out through 95, which has been quite significant resistance over the last year, really. And what it looks to me like we have here now is an inverted head and shoulders pattern that's formed, and the break above 95 on this dollar index is a bullish break that points to the potential for further upside. Now, I have seen some commentators out there and currency experts and whatever who are saying that the dollar's bull run is coming to an end and it's not sustainable and the dollar's going to weaken again. Let's see. My charts don't seem to suggest that at this point in time. That to me still looks like a bullish setup for the US dollar. Where I will concede that I'm wrong is if it starts to break back down below the neckline of this inverted head and shoulders. And I think if it starts to go below about 94 or below 93.50 on the US dollar index, then I would say, okay, maybe I've got it wrong, and then the dollar looks as if it actually might go weaker again. But for me, for right now, this still suggests that there could be further dollar strength ahead, I think. Then this is the US dollar versus the euro, and essentially you can see it's just an inverse of what that previous chart that I showed to you. So here, instead of it being an inverted head and shoulders, it's actually a head and shoulders top. If the dollar moves, or if the price of this moves down, it implies a weak euro and a strong dollar. Now, what's quite interesting to note here is that there is a gap in the chart down here at about 108 on the dollar-euro pair, and that conveniently is exactly where a head and shoulders target would project down to. So I think if this dollar-euro remains below 1.16, then there's a chance that you're going to see this dollar still strengthening further against the euro, and possibly at some stage down the line it could even go and try and target that gap from the middle of 2017 there. Right, and then this is the pound versus the dollar. So the pound has been pretty weak recently after breaking below this rising trend in what it was about April this year. You can see how the value of the pound has gradually just been grinding lower and lower and lower. There is some lateral support down here at about 127.50. You can see there's a few significant swing highs and swing lows from the last year or two there. It's bounced off that level now in the past week. But to me, overall, this chart still doesn't really look all that great. And my sense is that it actually, at some stage, I think it's going to break below this dotted line. And I think we're going to see it going back down to the Brexit lows. So back down to 1.2. Maybe even a little bit lower. And we'll need to see, how does this Brexit play out from here? Are they going to have a hard Brexit? Are they going to exit the European Union without a deal? Or is are they going to save the day somehow? Remains to be seen. But a hard Brexit, I think, would probably see the pound coming under pressure. And technically, if you ask me just to answer technically what I think is going to happen, well, on the technical, I think it's going back to the prior lows. That would be my answer. All right, and then this is the rand-dollar exchange rate. It's a weekly chart, so every candlestick pattern here represents 1 week worth of trading activity. And what's notable here is this break above this channel. So that channel's been intact for 2.5 years. It started in the end of 2015 after Nene was fired as finance minister. And then Pravin Gordhan obviously was reinstalled quite quickly thereafter. The rand strengthened gradually through 2016, 2017, and into early 2018. The break above the upper boundary of that channel now is quite meaningful, and it does signal the likelihood that that the rand could remain on the back foot now for the foreseeable future. The break above was about 13.80 rand, was a bearish break for the rand. And whilst it's probably overshot a bit, and it's looking as if it's beginning to consolidate now, the risk, I think, still is for the rand to gradually move weaker from here, I think. This is a daily chart of the rand-dollar exchange rate here now. So there you can see what some are terming a bit of a flash crash in the rand, where it went from 13.20 or 5 odd, and very briefly in the early one morning it got to, I think, 15 rand 45. So a very swift move over a 3-day period, and that was following the fallout from Turkey and general nervousness around emerging markets that we got sucked into. Now you can see that the currency has begun to strengthen a little bit since then, but broadly speaking, this weakening trend remains intact. This weakening trend, it started in March of this year, and it's still very much intact. So it won't surprise me now if we do go into consolidation mode on the rand for a little while, for even a couple of months maybe. But whilst this weakening trend is intact, the balance of probabilities actually still does point towards further medium-term weakness in the rand-dollar exchange rate. Just in terms of levels, look, 14 rand is a big level. That was the high from June of this year. If that was to break to the downside, then somewhere down here around about 1360 odd is where the weakening trend would come into play. And that's where I would quite feasibly see a turn in the rand where it could start to move weaker again. All right, and let's just have a look at some of the South African indices. We look at the top 40 industrials, resources, financials, gold mining index, and then the general retail index. So here's our top 40. This is the spot index, right? So you can see it's really just been very sideways and choppy and range bound for the most part of the last 6 months, since February really. But it is narrowing into the apex of this triangular type of structure. So the upper boundary here is around about 52,000 or just above 52,000 on the spot index. I think, let me just see where we're trading today. Are we right now, spot, we're trading at 52,100. So it's up a little bit from yesterday, not a lot. So there's this overhead resistance area there that needs to be overcome. That, as I say, it's around about 52,000, maybe call it between 52 and 52,500. There's a bit of resistance there. If it were to break out above that, that could be quite bullish and could potentially see a little bit of a squeeze to the upside, I would think, as a possibility. And then, of course, you've got this rising lows from April here. So it's narrowing into the apex. It's going to find a resolution one way or the other quite soon. And for the moment right now, it's sort of looking as if that resolution could be to the upside. Then here's your industrial index. It's a fairly similar looking chart to what we just saw in the top 40. And you can see how this downward trend that joins all the highs from earlier this year is now beginning to get broken to the upside. And that is that could potentially be quite a nice bullish break, especially if it can get going. The key will be that it needs to follow through. If it fails and reverses down from, let's just say, from the underside of this 200-day moving average here, well, then that would not be so great. Then it might just come back down into the range. So we'll need to watch that carefully. But it's starting to look a little bit more perky, I think. And then here's the resources index. So it's mostly just range bound for the time being, between 39,500 up to about 43,000. And You know, it would need to break above 43,000 convincingly to get going to the upside. I'm a little bit skeptical of that happening right now, just based on what I said about commodities prices, and also whether this rand weakens further or whether it strengthens a little bit in the near term. But technically, it just looks as if resources are range bound at the moment. You'll see in the charts of the stocks that we look at just now that Billitson still looks fairly strong, but Anglo American doesn't look all that strong. And those are the two main heavyweights in our resources index. All right, and then here's your FINI 15, the financial index. So what I think last month I said, watch, it looked as if it might be wanting to try and break that downtrend. It did break the downtrend. You can see quite clearly that has happened. It's now come back and given a retest. Sometimes they call this a goodbye kiss, where it comes, breaks the trend line, comes back, tests it again, and then moves up. So the fact that it's held above that prior downward trend and reversed up from there is a good sign. And it suggests that the outlook technically for the financial stocks is starting to improve a little bit. And I must say, when I look at a number of charts of the domestic stocks, so be they financials or be they retailers, I'm starting to see signs of things basing and things that are starting to look as if the worst might be behind them for the time being. And that's what this chart would seem to suggest as well. All right, then our gold mining index just remains absolutely devastating. This big drop that you see to the downside here earlier or last week was brought about by Gold Fields. So they published some pretty disappointing numbers and also indicated that they're going to need to restructure and that they're going to need to lay off a whole lot of workers and what have you. And just said that particularly that South Deep mine that they own is very problematic to try and make it a viable operation, just because it's so deep and it's so it's dangerous and it's expensive to mine and whatnot. So anyway, I mean, I'm going into maybe unnecessary detail here, but from a technical perspective, this gold mining index still looks pretty awful in my mind. All right, and then here's the general retail index, and again, this also reiterates what I was saying about some of the domestic areas of the market starting to look as if they might be forming a bit of a base. So here you can see how your retail index broke above the downward, that very steep downward trend that was intact during the second quarter of this year. It's broken there, and you could almost argue there's a little bit of a crude sort of double bottom here that formed, and now the price has begun to move up above the midpoint of where that double bottom was, which could quite feasibly indicate that this is a bottom now, and that we might start to see some sort of improvement in the general retail index. If you look at it from a results point of view, look at some of the results that have come out recently that have been very disappointing. We've had ShopRite the other day, which was very weak. This morning we've had Woolworths, which weren't good results. But also what we're noticing is that some of those results now, the stocks are actually initially selling off into the weak results, but then there seems to be buying evident afterwards. We're seeing that today on Woolworths. I mean, it was down, I think, 6% at one stage this morning. Now it's only down 1%. So it's definitely clawed back a long way off the earlier session lows. And likewise, ShopRite did something similar the other day, where it dropped quite sharply and then it's recovered very nicely, notwithstanding the fact that the results were weak. And I think what you're probably seeing here is the fact that these are probably bottom of the cycle earnings for these retail stocks. We've had a very weak economic environment. There's a very good chance, I think, that when the economic figures for second quarter come out, it'll show that we actually may have seen a recession in the second quarter of this year. So you're seeing the result of that in all of these retail numbers that are coming out. But what it does mean is that the base is now set very low, and that a lot of bad news is now in the price for these stocks, and that when next year's results come around, they're going to be building off a much lower earnings base. So there's that presumably has got to be something good. I'd struggle to see the results that we've seen now, these recent results for some of these retailers. I'd struggle to see them getting worse, quite honestly. It would take some doing, I think. So, and that talks to the possibility that we may be seeing a bit of a base starting to form in some of these domestic stocks now. All right, then let's have a look at our heavyweights in our market. So Naspers, Richemont, Billiton, Sasol, and Anglo American. There are the weightings for these. You can get that on the Satrix website if you're ever interested. These 5 stocks together make up 52% of the weighting of the top 40 index. So it's very important to keep an eye on these and know what they are doing, because that then can give you a bit of an insight into what the likelihood or the likely moves could be for the top 40 index itself. So let's start with the biggest one, that's Naspers. Here it's range bound really between 3,000 and 3,500 at the moment. You can see that downward trend that goes back to November last year. It's around about 3,400, but if you take these previous highs from June and July, then about 3,500 is where the overhead resistance sits. And for the moment, it's range bound between those two levels. I don't know whether it fails at that 3,500 level or turns lower, or whether it starts to actually push out to the upside. I'm a bit skeptical on a lot of these Chinese sort of internet stocks. I spoke about it on my TV show this week, the BAT. So the BAT is Baidu, Alibaba, and Tencent. A lot of those chart structures on those 3 stocks looking a little bit like rounding tops to me. So I'm cautious, but those are patterns that can take quite some time to play out. All right, and then Richemont, I must say I struggle a little bit to analyze this one technically. It's been very choppy and all over the show with false breaks here, there, and everywhere. So it's been up recently, mainly on the back of a weakening rand, as you can see there. It seems as if there's been a little bit of selling pressure at the upper levels over the last couple of days. If the rand remains firm and the stock continues to then digest that firmer rand, then I think there's a fairly good chance it'll come back and fill this gap at about 120 rand here. And then from there, who knows, it could even come back a little bit further towards the moving averages at about 115 to maybe 117 rand, that sort of area. A lot will depend on what the rand does, as I said. Right, then here's BHP Billiton. You'll see the similarity between this and the resources index chart that I showed to you. What's interesting here is the possibility that we may be seeing the forming of an inverted head and shoulders here. And usually, some of you that know a bit about technicals might say, well, usually an inverted head and shoulders it forms at a bottom. Doesn't have to always form at a bottom. It can form in a rising trend like this, and then it can actually become a continuation pattern. So I think what's going to be critical here is to see if Billiton holds this upward trend and then starts to move up again, and ultimately if it can break above 315 rand per share, that would be bullish for Billiton. If it faltered and it started to break this upward trend and move sort of convincingly below 300 and below 290, well, then that might not bode so well for the stock. So at this stage, I think it's anybody's guess. It's narrowing into that apex area where we will likely see a resolution before this time we speak again next month. We'll know whether it's broken to the upside or to the downside. All right, and then Sasol remains very strong. You can see this upward trend that's been in place since April, May of this year. It's contained the trading action quite well. So any pullbacks towards the bottom of that channel look as if they represent decent buying opportunities, and there've been some profit-taking opportunities along the way at the upper boundary of that channel. Overall, now it's started to move up quite aggressively in the last 2 days or so. So it looks as if it could start to make its way up towards the upper channel boundary before it then starts to consolidate again. All right, and then last one is Anglo American. So here, this chart to me doesn't look as good as the chart of Billiton. Billiton's got very little overhead resistance to contend with before it breaks to new highs. And overall, that Billiton chart looks quite constructive. This Anglo American chart, on the other hand, has been making lower highs and lower lows for the last 2.5 months. And it's recently broken down below what looks like a bit of a bear flag pattern here. So if it continues to struggle here, then there's a chance that it maybe takes another turn lower. First support would come in at 280 Rand. And if that was to go, then your next major line of support is at about 265 Rand. So, and also take note that your 50-day moving average is pointing down here. So it indicates weak medium-term momentum. So it would take some doing for this chart to turn more bullish in my mind. For the moment, I'm sort of neutral to mildly bearish on it as things stand right now. Okay, So that's the end of my talk. It's exactly 1:15, and that now leaves us plenty of time, or it leaves us 15 minutes for questions and answers. So if you could please pop your questions into the question box, then I'll get to them one by one. There's a disclaimer that you can read if you're bored and you want to do something. You can have a look at that. But in the meantime, I'm going to bring my charts onto the screen here in front of us so you can see. And then we'll look at some of these things technically, and I'll answer all of your questions as best I can. I see there's one question in the box already, asking about S&P 500 divergence, and I saw that question came up. It's from Sebolelo. That question came up 12:33, just when we started the presentation. So let me just quickly go back to the chart that you're referring to there, Sebolelo, and let's just see what you were looking at. Let's just go through here. It was on, yeah, so you might have been referring to this weekly chart, I don't know, and you were looking at the possibility of negative divergence, which is where you've got your RSI here making a lower high than what the price did on the previous time. So you've got a lower high on your RSI, but a higher high on your index. So yes, that would count as negative divergence. Let's just go forward to the daily chart. Yeah, there's a little bit of negative divergence evident over there as well, where you can see this RSI is making lower highs whilst the price has been making higher highs. What that simply implies is that the upward momentum might be slowing. So if that is the case, then it wouldn't surprise me if there is a little bit of consolidation on the S&P 500 here, which is pretty much what I indicated as a possibility anyway. All right, so I hope that answers that question. All right, then Chris has saved the day so that I don't have to keep waffling on with a question. Please, guys, please put your questions into the box if you've got. We've got another 15 minutes or so left to talk, and if there's no questions, then we'll have to cut it short, I suppose. So Chris asks, taking pain on MTN, at least the pain seems not to be getting any worse. Any ideas what is in store for MTN? Yeah, you're quite right about taking pain on that stock. It really has been immensely disappointing. I mean, I was looking at a number of charts of domestic stocks recently and looking at the weekly charts going back over the last couple of years to try and see, where these things have come from. And it's actually incredible to see the wealth destruction that has happened on some of these stocks, MTN being one of them. I mean, look, it was 250 Rand back in 2014. Now it's recently traded down below 100 Rand per share. I mean, it's just that is wealth destruction on a grand scale. So what to look out for? Look, this 100 Rand area, just psychologically, I think 100 Rand is quite important. But overall, from a pure technical perspective, longer term, it's not really exciting me all that much at this stage. Let's just look at the daily charts and see if there's anything. I mean, even here on the daily, it looks a little bit vulnerable almost to me. I mean, this, if I have an unbiased eye, that to me looks like it's forming a rising wedge pattern here. And rising wedges, when they form within a downtrend, usually break to the downside. So if that is the case, and also there's this sort of zone of what's now resistance, which is at about 105 Rand. I'm just pointing it out there. It comes in through all those previous lows that we saw in July. So if it fails at 105 and reverses down, and then there's a chance it actually might make another flash down below 100 Rand again. Let me just see where it's trading today. See, it's 105.79, so it's up 2% for the day. Yeah, so I think just keep an eye. I mean, if it fails, and particularly if it fails at the underside of the 50-day moving average, maybe, then it won't surprise me too much if it does actually have another leg to the downside. Not a very healthy-looking chart for the short term, as I see it, or for the long term, for that matter. All right, then Doe is asking me about Woolies. So Woolies has come out with results today, which were a little bit weak. Their numbers, the dividend was lower than expected. I must say, this Woolies chart of all the retailers in our market is still the weakest. I mentioned that some of the retailers are looking as if they're starting to show some signs of basing and maybe that the worst might be behind them. But Woolworths is not one of those. Woolworths for now still very much in a downward trend. Today it's traded down below $50 again. It's been down to about 48 or so. So if I was to draw in today's daily candle, it's going to look something like that probably. Not a great looking setup. It would need to start breaking above this downward trend to have any hope of starting to form a base. But in terms of retail, though, I think there's probably other better looking setups around. And okay, I see you also ask about RMI, though, Rand Merchant Investments. So this is the company that owns Outsurance, and it owns Slug of Discovery, and it owns MMI and RMB Structured Insurance and whatever. This will need to get up above 40 Rand to start looking more bullish. And then you could probably make the case that there's a bit of a crude inverted head and shoulders pattern there. If it got above 40 and you take the height of that head and shoulders structure and projected it up, it gives you the potential for a move up to about 45 Rand. So yeah, if it gets above 40, that looks more bullish to me. Of course, if it fails at 40 and turns down, that won't be such good news. So watch what happens around this 40 Rand level. That's quite key. All right. Then Hugh Gosnell asks, can we have my analysis on Mondi? Of course you may, Hugh. It's one of the few stocks in our top 40 that really is still looking pretty strong. There's only a handful of them. Mondi is one of them. Nice, solid upward trend here. Very much, case of rising highs and rising lows. If I have to draw in a channel of how this is trading here, let me just try and tidy this up and get it a bit more accurate for you. Something like that. The chances of it going up to sort of 420, that sort of area, it looks quite feasible that it could go up there. It's a good chart. It's a good setup. It's a good fundamental story. I've seen some nice research on it recently following the results, which suggests that there's still higher price targets in place. So I think the momentum here is well and truly up, and that upward momentum probably stays intact for the foreseeable future, I think, on Monday. All right, then Robert says, thanks Garth, is there anything going on in Nigeria, the largest population in Africa, that we would be looking at on the JSE? Yeah, look, I mean, MTN is in Nigeria. I can't say too much more beyond that, I don't think, off the top of my head. But you're right. I mean, it's a large population. It is growing. It is exciting. It's got lots of challenges, but it is exciting. All right. Then Justin says, with Brexit looming and you were exposed to pounds, would you be inclined to get into euros or dollars, and when? Yeah, Justin, that's a good question, and I am. I've got offshore money spread across euros, dollars, and pounds. And recently, not so recently, a few months back, I significantly reduced my exposure to the pound and put that money into the US dollar. So I don't have many pounds left. And I still do think, generally speaking, that I'd be inclined to favor the dollar. If you think about it fundamentally, the US is the one developed market where they're raising interest rates. So that surely has to be some sort of a draw card for the dollar against the likes of, Britain, which is not, Europe, which is not. So to my mind, I still think the dollar is probably the safest bet in town. That's my opinion anyway. And also the technicals would seem to support that. So I'd be inclined to be overweight dollars still, even though I've seen a couple of contradictory reports from a few analysts recently. But my technicals suggest that the dollar is still remaining strong. All right. And then Hugh says, if you haven't already discussed it, can we have your view on the Euro Stocks 50? Let me get that up for you quickly. Just going to quickly bring a web. I don't have that Euro Stocks 50 on my MetaStock platform there. So what I'm going to do is I'm just going to go get it off stock charts for you quickly. I always find this a good place to go and find global charts that you can't get locally. And this thing it's free, by the way. So it's a great website for free charting. All right, so here's our Euro Stocks 50. Let me just zoom out. I'm going to make it a weekly chart, just because I think that's looking at it at a longer term, and I'm going to look at it over, say, a 3-year period. And then I'll just give you my thoughts on it. Do keep in mind this is it will look similar to the DAX to some extent, yeah. So it's not identical to the DAX, but there's certainly similarities here in the sense that it's not looking all that strong. You've got this index not testing its prior highs for a while still. Lower lows, lower highs recently. So it doesn't look all that exciting to me. Yeah, on a global equities index basis, I still think the S&P 500 is the strongest. The European markets are starting to look a little bit weak in my mind, and also the Asian markets are sort of a bit iffy to me. All right, so I hope that answers your question, Hugh. Then Robert says, are there, I think on the JSE companies, either there or possibly going there. That obviously relates back to your question on Nigeria, and I don't think I've really got too much more to say about that. All right, then Julian asks, please can you have a comment on Astral? For sure, you may. Let's get there. All right, so here's the chart of Astral. What's making this come down, I think, and struggle is the fact that the maize price has been moving up quite a bit recently, and Astral, being a chicken producer, they've got to feed the chickens, and of course they feed them with corn, and it's the input, the corn, is starting to cost quite a lot more. While I'm talking about that, I'll just quickly pull up a white maize chart on another screen here, just to show you what I mean by that, and show you how the white maize price has actually started to get going quite aggressively to the upside over the last month or two, and that's consequently why we've seen the price of Astral coming down. I'm just getting it up for you right now. All right, so here's the maize price. This is on investing.com. And just have a look at how the maize price has gone from 1,800 Rand a ton. Gone from 1,800 Rand a ton in the beginning of this year. Sorry about that. I clicked on something that I shouldn't have. There we go. It's gone from 1,800 Rand a ton earlier this year to currently north of 2,300 Rand a ton. So you've got your maize price up sort of 20% odd in the fairly short space of time, and you can see it really got going here from the middle of July to now. The maize price has moved up very, very aggressively, and that has consequently resulted in that drop that you can see in the share price of Astral over there. So the two are negatively correlated because of the fact that maize is an input. And just, I'm going to deviate, but this is something I kick myself every now and again on certain things. But when the price was down here at about 1,800 Rand a ton, maize farmers cannot make money at that price. So you know that anything below that, they stop producing maize. They'll look to try and find another crop to farm. So there was the maize price was only ever going to go up from that level. It was just a given based on pure supply and demand dynamics. And I was quite keen to go long of some long-dated maize futures contracts. And I didn't have an account with a broker at the time, so I didn't get around to it. I got the forms and everything, never filled them out, never did the trade. And here I sit kicking myself. So, but just keep that in mind. You know, maize is an interesting product in the sense that it has these wild swings. It trades to basic economics, and sometimes it just gets way too cheap. Sometimes it gets way too expensive, and you can often fade those moves as well. Okay, how are we looking for time? We've got about 3 minutes left. Let me see what else I can quickly get through here in the questions. Are you aware of any unhedged SA-listed equities that are trending upwards? That's from Mark. Unhedged SA-listed equities, I mean, are we talking resources? I'm not quite sure what your question is there, Mark. So I'm going to move on just purely for time perspective. Dave asked about Mondi again. I think we've covered that. Michael asks, can I look at the MediClinic chart? Yep, I certainly can. So here it is. It's not been looking great at all. But over the last day or two, we've seen these medical stocks popping up a little bit. Aspen also popped quite aggressively yesterday. But from a general technical perspective, it still doesn't look all that great to me, Mediclinic. But it's probably, I want to say that the worst is probably, it was probably close to the bottom. But you never can say never, actually. That zone of resistance that I've put in there is quite important. That comes in at about 93 Rand. So it would need to get above 93 quite convincingly, I think, to then potentially mark a more clear bottom on that chart, I think. Right, I hope that helps. Then Darren asks my view on Tiger Brands. So Tiger Brands came out with pretty poor results the other day, and you can see the consequent drop in the share price. It seems as if the area around about 270 Rand has attracted a little bit of buying interest, and it's moved up. But my sense is that it probably chops around here for a little while now, between maybe 300 and about, say, 280, 270, that sort of area. It maybe needs to just catch its breath a bit after such a significant drop. But from a bigger picture technical perspective, again, it's not looking wonderful. There you've got that support at 270 from the lows in 2015 and 2016. That has held on this recent sell-off. But you've still got lower highs and lower lows in place here. Yeah, not a great looking setup overall, but very oversold in the immediate future. All right, and then I think actually, have I got any time? There's one more minute. There's not any more questions, I don't think. Oh, here we go. An opinion on Glencore from Robert. Okay, I'll make that the last question for the day. So Glencore, out of the three major diversified miners, Billiton, Anglos, and Glencore, this is actually looking the worst of the lot at the moment. You can see how it's formed this massive topping pattern. Zoom out a bit for you. And then this break below what was about 60 Rand, thereabouts. You can see how that was support on a number of occasions through late last year and early this year. That 60 Rand support has now been broken to the downside, and it seems as if the stock just can't get back above it. So to my mind, that is a little bit worrying. It almost seems like it's setting up for another leg to the downside. From a pure technical analysis perspective, if you take this as a big trading range between 60 and 70, the fact that it's broken that, it generally should move in to the extent of the range when it moves. So that means you're looking for a 10 Rand move to the downside, which could imply a move from 60 down to about 50 or 48 or that sort of area. So not looking too great to me. I think out of the three diversified miners, first place goes to Billiton, then Anglos, then Glencore. All right, that's all we have time for today, I'm afraid. Thanks for tuning in. I see there was a good number on the webinar today, so that's excellent that more people are coming in each month. Thank you very much. I'll be with you next month. I think we've diarized the date as the 20th of September. So I look forward to chatting to you then. All right, have a good time, everyone. Thanks so much. Cheers.